Hi friends, this video is about how to invest in stock market, means stock market basics. This is a series of lectures, starts with market basics. Okay, beginner's guide to stock market. Contents. What are stocks? What are different types of stocks? How stocks trade? Why stock price changes? Reading stock words, the bulls, the bears. Okay, and the conclusion. Okay, let's start with what are stocks. Stock is a share in the ownership of a company. Represents a claim on a company's assets and earnings. You cannot say day-to-day running of a business. Okay, one vote per share to elect the board of directors at annual meetings. Okay, stock is a percentage, small percentage of a share in the ownership of a company. Okay, you can claim company's assets and earnings, but you cannot decide the day-to-day meetings. Okay, decisions done by the companies. Okay, you can get a single vote in electing a board of directors. For that also you required some percentage of stocks. Okay, that is also almost practically we are like a individual investors. Okay, we will hold very less percentage of total number of stocks. Okay, uh, profits are sometimes paid out in the form of dividends. If company earns profit, then it will paid to investors as a dividends. Okay, whereas in case of loss, uh, it will distribute all its money to its creditors, debitors, and some other things, and then it will distribute the remaining money to the investors. Why stocks? Why companies offering stocks? Because for example, if you take for a financial companies, if its requirements are more than their potential, then what they can do, they have to take debit from some person or some company, some banks. Okay, this is also same procedure but something different. They are offering percentage of ownership by providing a stocks. Means by taking some money they are offering some percentage of ownership, that is called stocks. The main purpose of stocks is to raise the funds for a company. IPO, initial public offering, this is the first sale of a stock issued by the company itself. Okay, debt, it's a taking a loan from bank or by issuing bonds. Equity means issuing a stocks. Two types of financial managements can be done for a company, that is one is debt and another one is equity. You should understand the difference between debt and equity. Okay, debt means you we are in mutual agreement that I will take this much money and I will return it to you with this percentage of interest. Okay, here you are coming to agreement that you will return money, whereas in comes to equity, you are offering a ownership, means if some profit comes you will give it as a percentage of profit, how much shares you are getting and that much percentage of profit you will get. And when it comes to loss, it will, you are going, the loss of the company is also distributed to you. That is the same thing. You should understand risk, that is the risk in the stocks. Earn a lot if company is successful, lost their entire investment if company isn't successful. Okay, if company is not successful, what they will think, what they will do actually, they will distribute the remaining money to the all the peoples or banks from where they have taken money, and at last they will distribute it, the remaining money, to the shareholders, means investors. Okay, types of stocks: common stocks, preferred stocks. What does it mean? There is nothing like something different. Okay, the purpose is slightly different. generally that we are discussing, like stocks are called common stocks only. They have a share of a ownership in the company. Okay, when if it is successful, they will yield a high results returns. When there is a loss, they will lose some money. Okay, and the creditors, when an event of liquidation comes, they will distribute the money for the first creditors, bondholders, and preferred sellers, and then they only come to common stocks. Okay, preferred stocks. What is the difference between common stocks and preferred stock? For preferred stocks, you will get a fixed dividend forever. It doesn't mean whether the company is in loss or in profit. Okay, you will get a fixed dividend. Okay, but you cannot expect when it is in profit you can expect a high yield, high dividend. When it is in loss you can expect loss. Okay, it will give a fixed dividend. Okay, on event of liquidation, preferred stocks shareholders are paid off before common shareholders. That is the difference between common stocks and preferred stocks. How stocks are traded? Most stocks are traded on exchanges. Means exchanges are a places where buyers and sellers meet and decide on a price. They will get a mutual agreement and they will decide the price. And stock market is to facilitate the exchange of securities between buyers and sellers and reducing the risk of investing. And there are two different kinds of stock markets. That is, one is primary market, another one is secondary market. Primary market, where securities are created, means generated, IPO generation. Whereas in secondary market, investors trade previously issued securities without involvement of companies. Okay, these are the some exchanges. New York Stock Exchange, this one is the most prestigious stock exchange in the world, and NSE, National Stock Exchange, BSE, Bombay Stock Exchange, these two are Indian stock exchanges. Why stock price changes? Any guesses? Okay. The basic funda in our life is that one only, supply and demand. Okay, the stock price changes at most fundamental level. Supply and demand in the market determines the stock price. Okay, and what is the market capitalization of a company? For example, for a company is there, comparing just share price of two companies is a meaningless. You cannot compare two companies by its share price. Okay, you can compare two companies by its market capitalization. Market capitalization is nothing but share price is multiplied into total number of shares, outstanding shares. When you want to compare two companies, you have to compare with market capitalization. Okay, and earnings are what affects investors' valuation of a company. Okay, what most of the investors will think, earnings are the most important factor in a company. If company is earning good amount, then they will think that it's a very good company. Means that is the psychology of investors. Okay, but there are other indicators that investors use to predict the stock price. At last, investor sentiment, attitude and expectations that ultimately affect the stock price. Okay, not the demand and supply. Of course, the background, the demand and supply changes the price, but investors' beliefs, attitudes, sentiments will decide the stock price. There are many theories that try to explain a way stock prices move the way they do. But unfortunately, there is no one theory that can explain all these things. Bit bad luck, right? Don't worry. Bulls and the bears. Bull market is when everything in the economy is great, people are finding jobs, gross domestic product is increasing, and stocks are rising. But the simple thing is, when stocks are rising, that is called bull market. Okay, if person is optimistic and believes that stocks will go up, he or she is called as bull. Okay, the bear market, when economy is bad and recession is looming and stock prices are falling. Simply, when stock price is falling, then that is called bear market. If person is pessimistic, believing that stocks are going to drop, he or she is called a bear. Bear. How to read stocks? Let us to look at this some stock screener that I have taken screenshot today itself. Okay, can you able to understand something? I think you can understand something like company name. This is the name of the company. Symbol. What does symbol means? Actually, these companies registered to the exchanges by these kind of symbols. Okay, exchanges doesn't understand the company name. They will understand the symbol of the name. And this is currency. What we say Indian currency. Okay, PE ratio. Okay, dividend yield 52-week percentage, dividend per share, volume, last price 52 high, 52 low. I will discuss one by one. Okay, PE ratio, price to earning ratio. This is calculated by dividing the current stock price by earnings per share from the last 4 quarters. Okay, means we have a stock price and it will be divided by earnings per share from the last 4 quarters. Next, dividend per yield. Before that, I will discuss about dividend per share. Okay. Dividend per share. This indicates the annual dividend payment per share. This is the annual payment towards single share. Okay. Now, dividend yield. Dividend yield say it's a percentage of return on dividend. It's a dividend per share divided by price per share. Sorry. Okay. Next, come to 52-week price change. Okay, means overall price change from last 52 weeks. Volume. Volume means number of shares traded over the in that day. Last price, closing. Last price means last traded price of that stock. 52-week high. In last 52 weeks, what is the peak value, and 52 low means in last 52 weeks, what is the lowest value. These are new terms. That's it. Comes to conclusion. Stock is simple ownership of a company. Stocks are preferred stocks, common stocks. Stocks are traded on exchanges, and price changes due to investors' beliefs or feelings. Okay. A person is bull means market is bull market means price is increasing. Bear market means price is decreasing. That's simple. Thank you guys. Please do like or share your experience by comment. Thank you.